Hello everyone, welcome to this class. This is lesson 10 of our SMC strategy series. And today we'll be talking about multiple time frame analysis. In our previous class, we spoke about let me say our previous classes, we spoke about liquidity, concept of liquidity, where we say we need liquidity to fuel our order blocks. Okay, we want to see liquidity above our order block. If we do not see liquidity above an order block, then that order block is the liquidity. Okay, that's just the belief that if though it doesn't work 100%, nothing works 100% of the time, but most of the time, if you don't see liquidity above your order block, then your order block is liquidity. Example, look at this place. This is the liquidity, this is an order block, right? This is form of order block, but see that we don't actually have any form of liquidity right there, and the order block was used as liquidity, and it turned to breaker block, and you see this, and so that's just it. When you do not see liquidity above your order block, then there's high probability that your order block is the liquidity. Okay, that's just what I'm trying to say. So we want to see liquidity above there, and we spoke about different type of liquidity we have. Trend lines, equal lows, equal highs, buy side, sell side, and so on and so forth. There are other form of liquidity we'll talk about later on as we proceed. Okay, we also have stuff like Asian highs and lows liquidity. We have daily open, daily close. We have monthly open, monthly close, weekly open, weekly close. Those are liquidities because some people place their SL and their buy and sell stops at those zones. Okay, those are also liquidities, and what we usually use them for is just to fuel our entry. That's it. Nothing more. Okay, nothing more. If you are using uh uh like Asian high, Asian low, when price come to clear Asian low, just and closer above it back, you know that there's high. We'll talk about all these things later. Okay, but just on that, that is just the basic understanding of liquidity. We want to see it above our entry point, and we want to see it where we exit the market. That's the aim of liquidity. Okay. So having known that, it's not I know we will not understand it once, just watching one video. Okay. You have to watch and rewatch and practice. It's not easy to understand. But if you can get it, liquidity plus market structure, if you can understand these two, you are a king of SMC. You hardly get it wrong. You get it wrong sometimes, but you hardly get it wrong. Okay, liquidity and market structure. These are very, very important. To understand internal and external structure. You will not be taking trade from internal structure and be expecting your TP to be at external structure. It doesn't work that way, especially if you are counter trading. Okay. We'll see a lot of examples. Okay. So Rome was not built in a day. With time, we understand it. We have a lot of live streams, so we'll just do uh chat together. Okay. So for now, for this class, what we want to study is multiple time frame analysis. Okay. So in this multiple time frame analysis, you'll be using two time frame. Okay. You can use the higher time frame for your overall bias. Okay. For your overall bias, then use lower time frame for your POI. Okay. Then use even more lower time frame as your entry. Okay. We'll look at it one after the other. Just calm. I don't know. I just coined this MLT. I just wanted to put more lower time frame. This stage is for if you want to use if you want to be having a conservative entry. We'll talk about it later when we get to entry. Okay, that's why you'll be using more lower time frame, like 1 minute, 15 seconds, and all for your entry. But let's see how this works. Okay, now let's say we have this price action right here. Okay, so this is clear to us that price is moving up, right? This is clear to us that price is moving up because we are breaking structure to the upside and we are protecting higher low. Okay, so anytime we are protecting higher low and price is breaking higher highs, then we are on an uptrend. Okay, all right. So let's see, this is for our time frame. Let me make this bold. Okay, so this bold line is 4 hours time frame. Okay, bold line, something like this. Sorry, this bold line right here, entire time frame. So this bold line is higher time frame. Okay, let's say 4 hours, but let's just say higher time frame. This can be like 4 hours. Okay, then we have a broken line like this. So let's make this a broken line. Okay, so let's say broken line is lower time frame. Okay, broken line is lower time frame. Okay, now if you are to use, if you want to trade with by multiple time frame analysis, okay, now on this lower time frame, let's keep this in for by the side. On this lower time frame, you first analyze right there. Okay, so let's say we have an order block below here. Okay, then we have okay, let me just use this. We have an order block below here. Okay, and the price was returning to that order block on 4 hours time frame. Key take notes, was returning into the order block, also creating something like this. Okay, there we have like double equal low. Okay, and price tap into it and tap into your higher time frame PO high. Now this is a valid PO high because make this good. Now this is a valid PO high. Okay, because we had the break of structure right here, right, and we have equal low stability group right here. Price cleared everything and came back into this zone. Okay, so immediately price come back into this zone, you will now go down to lower time frame. Okay, let's say this one is 13 is 4 hours time frame. Then you can go to a lower time frame. Okay, you can go to lower time frame like 15 or 30 minutes time frame, and you see something like this on that lower time frame. Please push down, we give you a movement like this, right? That's what you expect to see. Okay. Sorry, I don't know why my drawing is very crazy. It's very bad like this. So now you go to lower time frame. When you go to like that 1 hour time frame, this is what you see on 1 hour time frame. Already you have the reason to enter the trade from the 4 hours time frame, but you are not entering yet. So you will now wait on 1 hour time frame to see a change of character. Okay, on 1 hour or 30 minutes time frame. Okay, let's stick to 30 minutes time frame to see a change of character. You want to see this low taking, okay, and take this high for you. So this is a change of character. Okay, this is a change of character. Lower is broken. Then lower high is also broken. So you have a change of character on your 1 hour time frame inside 4 hours order block. So you have another 1 hour order block from here. That's okay. 1 hour time frame. Oh, sorry, 30 minutes time frame. I already choose So let me make this a broken line. Okay. So we will still also look for normal liquidity on 1 hour time frame like this, something like this. Like then tap into your order block. Then you can now enter from there. You can now trade from this order block inside the big order block that obey the same principle, break of structure and liquidity pool into your UI. Then you can now trade from that order block. So this is a multiple time frame analysis because you have the same setup on then you can target the break of structure of the 4 hours where you started your analysis from. Okay, so this is multiple time frame analysis. It's very easy to understand. I believe everybody understands that. Then when 4 hours move up and break and create a new high like that, you have a reversal, then you can have another order block. So when it comes into that order block, go to the lower time frame and you understand and you find the same change of character. Okay, so different people use different time frame as their lower time frame. Then if you want to use a much more smaller time frame, on inside that 15 minutes, you go down to like 1 minute or 30 seconds and still look for change of character again before you enter. If you want to do that, you'll be having a you'll be missing a lot of trades, okay? Because some trade will not give you all this together. So it's just okay for you. And if you are doing 1 minute time frame, you have to stay in front of the PC watching. You understand? So it's better you just stop at just lower time frame and place your entry, put your stop loss below the 4 hours stop loss, or you can put it below the when we get to entry, you see how to set your stop loss, all right? So just enter from lower time frame and have your high here as exit liquidity for targets, okay? When we get to entry, we'll speak more about this, okay? So this is just what multiple time frame is all about, okay? This what multiple time frames all about. I think this series of classes I've been having, we'll call it intermediate classes. Then we'll be having like a master class later on. I will look for a name to call it. Then after this, we'll be having master class where we can be using all these things to formulate different kind of trading strategies. Okay, we'll talk about that with time. But for now, let's just understand the concepts, how all these things are being put together. Okay, so let's see if we can find an example with this on the chart. Okay, that we can use. Let me just clear all this. Let me pick another asset entirely. Not this. Let me look for okay. Wow, it's still really fairly short. I didn't take the truth. For 200 pips. Okay, so sorry about that. So this is 4 hours. Let's go to 4 hours. I love to use 4 hours to start from 4 hours. So people start from daily and go down to 4 hours for entry. No, I don't like that. Okay, we are day trader. The higher time frame you use, the more difficult to see trade. Okay, so let's just use 4 hours, starting from 4 hours. Okay, I'm looking for one that really will be everything that we need. So sorry, I should have done this more, but let's just see how we perform it. Okay, let's say we have a group of structure right here. Let's say we have a group of structure right here. Then we have this trend line liquidity, all of this. So price came to clear all this liquidity and tap into this order block right here, into this buy to sell week here. Okay, right? So inside here, we now go to lower time frame. instead of us to just put our entry here, will now go to lower time frame. Like let's just put something there so that we can find it easily. Okay. So we'll go like 15 or 30 minutes time frame. With that side. Wow. Here we are. Okay. Here we are. So right here, we'll look for the same thing. We'll not just jump into the trade like that. We'll look for the same thing. Okay. So can you see inside this? We have this is the last high we have. Okay. This high is like a bit of structure upward. Then price broke the low to give us a change of character clearly. Okay. And we can choose this as our order block. Choosing that as our order block. This green candle here as our order block, and we have this as our unity. Okay. So price starts to tap to our order block right here. And just so we're targeting the low 4 hours. Let's go to 4 hours time frame to see that. So we're targeting that low 4 hours. So that's where we started from. That is this point. That's it. So that's how to use multiple time frame. Is this clear? Yeah, I think that is clear. Okay. So that's an example of it, and that's very easy. You can find more example on your charts after closing these videos. Go to on your charts and find more examples. You can feel free to share it on our community so that we can all gain from it. Okay, that will be the end of today of this particular class, multiple time frame analysis. We'll be using all these to form a trade. Okay, we'll be putting all these we have been learning together, so we can use them to form our trades. All right, so that's all for this particular one. Thank you for your time. Make sure you practice, go to your chart, find these things. When you see them, post them on the group chat. Let's all learn together and see you at the top. See you on the next class. Have a wonderful night. All right, bye-bye.